Hi, my name is Brian McMahon. I am the founder of Expert Dojo. We are one of the most prolific investors in early stage startups in the United States. We're investing in approximately 1 to 2 companies per week. And we look for extremely highly scalable companies that have the ability to become unicorns in the future. And today I wanted to talk to one of the companies that we brought into our venture studio at the beginning and have subsequently invested in. I personally love what Accel AI are doing. I think they're a phenomenal company. I'm here with their founder, and on behalf of investors in Republic and also folks who are part of Expert Dojo syndicates or anything else, I wanted to ask Sam a bunch of questions today so that you can get a feel from a venture capitalist not only what we think about the company, but also how we see it growing in the future and our investments growing with that. Sam, great to see you again.
Great to see you, Brian. Thanks.
So I've got loads of questions, right? So I've got loads of questions from us, and I've got loads of questions from folks from Republic that want to ask questions as well. But let's start off at the beginning. I'm going to start off from my side of it, what excites me about Accel AI, and then I would love to get your confirmation of some of those things, or maybe adding extra bits and pieces on top of it that I may have left out. So for me, video has become the most incredible thing in the world and the most terrible thing in the world at exactly the same time, right? It's become the most incredible thing in the world because it has defined everything we do. It has grown. Words like exponential don't even come close. Video has consumed the universe, but it's also the hardest thing in the world because I now have so many videos. I have so many things about Expert Dojo, 3 minutes, 2 minutes, 5 minutes, 1 hour videos, podcasts, everything else that I have done, literally thousands of pieces of content. And I have no idea where 95% of those pieces of content were. And that's been a problem that I've had for an awful long time. And then you came into my life and you said, Brian, if you just put them into a structure and an order using a superior intelligence, then you will be able to find whatever you need whenever you need it, and not just the actual videos themselves, but pieces of content in those videos. And it was like a ray of hope from the sky. And it made me so, and that was can you talk about the genesis of Accel AI and how accurately I portrayed the problem that you guys have solved?
Actually, I would say very accurately. And, we have plenty of stories of customers where we walk in and things are just in disarray. This stuff does just accumulate. And the genesis of the company is that I spent 5 years as head of product management for a high-end software product that was for big broadcasters. And this was back around 2010 when big broadcasters were the only people who had this problem. Today, you and I have this problem. Every brand, every political campaign, every sports team has this problem. But 10 years ago, it was really only the broadcasters that had stubbed their toe on this because they were shooting all the content. And so the company that I work for, Avid, which is actually a unicorn today, was able to build some pioneering software to help them organize the content, organize their teams. The problem was it didn't scale down very well. So we saw that there would be all these emerging needs, but Avid was too busy dealing with large broadcasters. And so in 2012, I left, really had the idea of starting Accel almost immediately. And kind of the rest is history. We built it as a boutique company. And then in 2018, I met you, and we also started raising money for the company. So essentially, since 2018, the last 3 years has been kind of a rocket ship ride for us.
And you are unique in the world of companies building unicorns because you actually drive revenue that has the ability to drive profits. And for folks listening to this, it may sound like a ridiculous thing that I'm saying, but honestly, it brings joy to my heart to see incredible artificial intelligence that actually drives great SaaS revenue from customers, which is recurring revenue that comes through, that has a phenomenal profit margin, that as it scales, it makes you a highly profitable company with great EBITDA, which is earnings before tax, depreciation, all those things. But really, in common person terms, you can make money.
Yes.
Talk to me about that, and talk to me about literally where this can go to, how much, not just how much revenue you can drive, but what type of margins that you can drive alongside that revenue. Because I love anything where the artificial intelligence becomes the principal component of what the company can offer, which means that you're going to get higher margins with that, and you get customers that stay with you for a long time. But dig a little bit deeper if you don't mind.
Absolutely. Yeah. So, I mean, our gross margins are in the 80 to 90% range. To your point, we're not a marketplace. We're not buying and selling some existing service and we have to just take our slice off the top. We are the service. And our customers have, as you do, a lot of video content. In many cases, hundreds of terabytes or even petabytes. A petabyte is 1,000 terabytes of content and just crazy amounts. And so for them to even get a handle on this stuff requires, first of all, that they use some software to help them consolidate and remotely manage it. And second of all, that they can use AI techniques to do things like automatically transcribe the video, tell them who was in the video, tell them what logos appeared, things like that. And those are the things that our software does. So as we layer on additional services, we can charge additional revenue for those services. And the thing is that shooting the video is the really big expense, right? Going out and sending out a videographer, a lighting person, a whole production. I mean, that is not a small cost. A day of shooting is thousands or even tens of thousands of dollars. And what we're saying is, hey, now that you've gone to all that trouble and you have, I don't know, a few dozen hours of footage, why not spend a few bucks on each hour of footage so that you can find it later and so that when you push it out to social media, it's already tagged. That is tremendously valuable because at the end of the day, the value of video as delivered today has a lot to do with the metadata that comes with it.
Yeah, absolutely. And you brought multiple companies on now. You've got some of the largest brands in the world that are already using the software. You've already built your revenue up, and it looks like this year you're going to jump well over $1 million for the annual revenue for the entire year. So a lot of what we would normally invest in has been de-risked by you because you've already shown that you're a growing company that is going to become more and more profitable going forward. Talk to us about some of the brands. I know some you can mention by name, some you can't mention by name, but maybe give some examples about how them using them. Like I love the political stories about how when any political candidate, like we know they never look for dirt on any other candidate, right? That would just never happen in America. Right. But like the beautiful thing about yours is if one political candidate wanted to have every single clip throughout all of the videos of all of the other candidates, which actually had them saying a particular word that may or may not be detrimental to their campaign, they can literally find that in minutes and hours and not days and weeks.
Well, that is certainly true. You can look for all the instances of a particular person in the frame and then look for the words that they said. I would also say that there's more positive uses of it, like for instance, last year, Elizabeth Warren's presidential campaign, and it was only one of the presidential campaigns that used our software, used it for all their town hall meetings. So they had over 100 town hall meetings and people, it was like an AMA session where they could ask them anything, right? So people would get up and ask all kinds of obscure questions. And they decided rather than just let that go to waste, let's make that our campaign platform. So when a question would come in over Facebook or Instagram and someone would say, what does Elizabeth Warren have to say about Somalia, right? They would be able to very quickly search for sound bites of her answering someone's questions at the town hall meeting in Montana or what have you. And there's like, oh, here's a good sound bite on Somalia. They would just package it up, push it out to Facebook and say, here's our platform position on Somalia. So you think about a campaign platform, it used to be a very boring document that you would, just have to read through. And now it's a platform is really a living, breathing thing where customers want to be able to ask questions and get answers in almost real time. And of course, the same is true with brands. The same is true with sports teams. People don't want to just go to the game. They want to be able to know what's happening between games, know how their favorite stars are feeling and practicing. It's become this kind of 360-degree, very rich environment where all these little scraps of video, from interview sessions to highlights to fan footage, all factor in.
This is an absolute game changer for everybody in video because the challenge with this is trying to imagine a scenario where somebody would not want to be able to segment all of their videos in a place where they can find anything they want, whenever they want, at any time. Like literally everybody wants to be able to do that. And then to be able to do it in a way that I can take whatever I said about a particular subject and actually be able to bring it out and send it over to folks, as you said, in minutes and not even hours. I want to help the audience understand from a venture capitalist perspective, what we look for when we're investing in companies. This is terribly important because for people who are on Republic or people who are on any form of crowdfunding, they will in many cases look for companies which are great companies. They will invest with their heart, and then they will invest based on what they see those companies doing. However, if those companies do not raise subsequent rounds of funding, it is unlikely that the valuation of the company is going to increase substantially. So unlikely that you're going to get a good return. So you want to make sure that Axle AI is going to keep on growing and is going to raise larger rounds through the venture capitalists in the future. So I'm going to speak to you about the 5 criteria that we as a major venture capitalist in the United States look for, and we're going to measure Axle AI against each one of those criteria to see where they measure up and to see how your investment and our investment, because we're equity holders in Axle AI, how it's going to grow in the future. So number one, and I'm going to give you an easy one to start off with, I'll always look for the truth, and the truth is the customer truth. It's the only truth, right? So can I see a direct line of sight from the customer growing from the revenue they're at now to $100,000 a month? Because $100,000 a month is our de-risk zone. It's not that a company can't fail after that, but it's just that once you're at $100,000 a month with enough clients in there, we know that the product works. We know that customers like it. We know that retention is sticky. You don't even need to answer because you've got over $100,000 a month and soaring, right?
Yes, no, we feel like we're in that sweet spot at this point. Obviously, we can't wait for it to be 200,000 or 300,000 a month. That's kind of the next goal.
Okay, but that's my next.
Yeah.
That's my next point. $100,000 a month, tick boxed. You're there. You passed it. You're moving on to my next point of criteria, right?
Sounds good.
Okay, number 2, we will look for the founder of the company having a proven track record of execution. Now, that proven track record about execution can either be other companies that they've started and they've gone into. It can be within jobs which have got really specific domain expertise which tie directly into what they're doing. Or it can be just a life of execution. Like if we see someone who's been continually failing and then that is a reason for them being successful at this in the future, it's a toughie, right? It's like saying somebody, they got into car crashes a lot, so it means that they're experts of car crashes. No, you're an expert at getting hurt. So can you speak to your track record of execution and how that speaks to Axle AI becoming a unicorn?
Sure thing. I think that the real track record that matters here is the 5 years that I spent at Avid. We took a product that had launched in a 1.0 version that was essentially broken, and not only turned that product around, but then grew it into the industry leader for high-end broadcasters. And so it was about 17 million of questionable revenue the year that I joined, and it was 55 million a year 4 years later when I left. And we, that was not only just blocking and tackling with the core product, but adding significant new capabilities. We even acquired a company partway through, and so that felt like a really relevant piece of experience, I would say, for what we're doing now.
Absolutely. And I love how you mentioned product fit in that. Again, for those people who are not investing a lot in companies, product fit is everything. If you don't hit a product fit, no matter how great the founders are, no matter how great the idea is, no matter how great the execution, it doesn't matter. You will fail because product fit is what speaks to the customer adopting it. So I absolutely agree with you, and that makes total sense. Okay, number 3 is we then look at the team and we're looking for skill gaps. So we're looking for areas of weakness. Think of it as a chain, right? Just the fact that this link is really strong. If this link here is weak, the chain is totally useless. So can you speak to the people that are in your team, what your team looks like, and then who's responsible for what, and then what areas what we need to look out for?
Sure. We have actually a pretty global team at this point of 22 full-time people. And many of them are engineers. The majority are technical. Some of them are very experienced. In fact, we just made an acquisition of a small company in Eastern Europe where the founder is like a PhD level engineering manager. And we brought him in essentially to shore up our engineering management. But we already had a very good team there. And we also have an extremely experienced team on the go-to-market side. So Neil Blake, who is our VP of the European region, worked with me at Avid and really helped make that product a success. He's basically, we're getting the band back together in this case. Patrice Goutabel, who's our VP of Product Management, is a very experienced product manager, going back to the photo industry and software for that. And Katie Scott, who's our VP of Operations, has done a tremendous job, and she has a background in the media industry as well. So it's a very good team. There's more people than what I've just mentioned, obviously, but we feel like we've got the right people for the job, at least for this moment. We're obviously continuously scaling the team.
And this is something that everybody who's investing in any startup needs to be careful of. Most startups are generally a product, a founder, an idea, and a plan. Right. And the challenge with that is that the chances of that plan and that one person making it through is extremely slim. It's just so hard. So many things will break all the way through. So the fact that you've already de-risked it to 23 people, the fact that
22, just to be
22, yeah. Well, you count as 2 people, right? And then
thank you. I'm flattered. Yes.
And then also the fact that you have de-risked it with such a high C-suite. Me looking at this as an early stage venture capitalist, it's a huge tick in the box. I mark these internally in my head out of 10, but it's a 10 out of 10. I know this team can achieve what needs to be done. And when I look at the skill gapping, do we have skills within video editing? Do we have skills within technology? Do we have skills within sales? Do we have skills within strategy? Do we have skills within marketing? Yes, 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 yes. Like, it's a very strong team. And then my last one is always the toughest one, right? How do we take this from $100,000 a month that we need direct line of sight to? Now, how do we take that then to an epic insight, which actually drives the revenue up to $5 to $10 million a month? Because we know that all of us as venture capitalists who are investing, we're not investing for you to become a $30, $50 million company. Like, that's nice. For some people, they may look at a 5-6 times return and say, wonderful, we did great. We invested at this price. We got it in afterwards. We want you to be a $1 billion company plus. And for you to be a $1 billion company, that means that you have to be doing $5 million a month plus in revenue. So can you talk us through what it looks like to take yourself from $100,000 a month to $5 million a month, and how long that's going to take?
Well, that would be a bit of an epic for this interview. But what I can talk about is the next couple of steps, because we definitely see the big trajectory and the opportunity. If you think about what we do, it's at the intersection of 3 really huge segments. One is video, which you've already talked about. The other is AI and machine learning. And the third is remote work. All of those are tens of billions of dollars a year, growing at tens of % in CAGR, compound annual growth. So the intersection, if you draw a little Venn diagram, and we have one of these on the Republic page, the intersection of those is going to grow much faster than any of the 3, and may even be growing at triple digits per year. So the challenge is, we have been largely a bootstrap company. We've been able to do what we can do. People find out about us, whatever means. We compete for RFPs. We won 2 out of 3 RFPs in the last year. But the point is, we've only been able to address what we can address. And by raising money, our goal is to have marketing funds so that we can do a lot more outreach. For instance, this article that just came out today in Business Insider, that's the kind of thing that we can do with a little bit of budget and a little bit of energy towards the marketing side. So we really see marketing as the key to rapidly expanding the business. We've been able to grow it pretty well so far, but it's been almost entirely bootstrapped. And part of the biggest reason that we're raising money on Republic actually is to drive our marketing. The second biggest reason is to continue adding to our technical team so that we can keep making the product more robust and easy to use. So I think there's a gap. We can see the next doubling or 2. And then after that, marketing really has to drive the opportunity. And we have to see that a lot more leads are coming in the door. The total addressable market for us is probably something like 1 million sites by the end of the decade. And today it's about 400,000 sites. But given the fact that we have a few hundred customers, there's a lot of room just in today's market for us to really get out and expand our business.
Amazing. And then just to speak to also one of the questions from one of the Republic folks, talk a little bit about what that next few years look like. So if this year we finish at $1 million plus, how do you see, and let's assume that we raise, $400,000 or $500,000 that comes through from the crowdfunding, and then maybe some venture capital money on top of that. How do you see that affecting 2022? And if you speak to 2023, that would be wonderful. And again, everybody should be aware that these are forward-looking projections. So nothing is guaranteed. This is what Sam and the team are hoping to get through, and they believe they're going to get through. But you should also look at this and do your own research. Go on, Sam.
Agreed. So the immediate opportunity is that our company has had actually losses that have been shrinking each of the last 2 years. Last year, I think it was about $160,000. The year before that, it was about $250,000. This year, if we execute well in Q4, we may be able to continue that trend and have even smaller losses. Those are very modest losses for a startup with $1 million in revenue. Typically, it's $1 million in revenue and $2 million in losses, that kind of thing. Mm-hmm. So we're running this much more like a real company, quote unquote, close to break even. When you have a situation like that and you inject capital, right? So we're already close to breaking even, the money comes in, we can say a good chunk of that money is going to go to expansion. It's not going to go to cover burn rate. It's not going to be because, we're just trying to get our act together here. It's to cover outbound marketing, expansion, and improvements in the product that make it easier to onboard new customers. So for 2021, the rest of it, 2022, and even 2023, those are going to be the themes. It's like, how do we reach more people? How do we improve their experience with the onboarding? Right now, it's still fairly customer intensive or white glove when we bring on a new customer. And what we really want is to have it that they can just click a button on our site, say, I'm ready to go, and be onboarded. So those are key ingredients to this. And the other key ingredient is that we have this strategic relationship with Seagate, which just started a few months ago, but it's already generating sales for us. That relationship, they're a $10 billion a year storage company, and they know that one of the biggest drivers of people buying their storage is video. But they also know that it's unstructured and that most of it gets left on the shelf. So that strategic relationship is going to be really key. They're already introducing us to like dozens of sales reps that they have focusing on their strategic priorities. And the idea is that we're going to jointly go to market and take these first few sales and kind of keep expanding that story out into the wider markets that Seagate occupies. So we're very excited about that one. And I'd say I put that as the third headline in terms of use of funds and things that are going to take us to 2 and then 5 and then 10 million a year. That Seagate relationship is absolutely crucial.
And so what everybody should be hearing here is that if real estate is location, 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 in Axel AI's case, it's technology, technology, technology. What Sam is saying is we've entered a new paradigm. Video has changed absolutely everything. Every single human being on the planet pretty much is going to want a way to segment and just be smarter about how they deal with their videos online. The more technology that Axel AI bring into this and the better that they make it, the easier it's going to be to onboard absolutely everybody. This is purely a numbers game. The more customers that come in, the more the revenue will drive upwards, the more we go to $2 million a year, $5 million a year, $10 million a year, $100 million a year, and that continues to grow forward. And this money that's going to be spent is going to be pushed straight into marketing and technology to keep on building that stack to get it to the stage where it can become a large round from a venture capitalist. And that brings me into the last two questions. First one actually ties into one of those last points that we have as an internal check on companies. And then I'm going to finish it off with one more question. So my last point on the check on the companies is, how good is this founder at being able to raise money? And I can say on a personal level, I said to Sam only 2-3 weeks ago that we would like to put an extra $50,000 into the company. And Sam said that they didn't want it because they had grown past us. We're an earlier stage venture capitalist, and they had already gone past us and moved on to what was being done in Republic, and now moving on to new venture capitalists in the future. I say it now on air, and I say it anywhere else. We would put $50,000 into this company in a New York second, based on the fact that we believe they're going to grow and we like where they're going there. But can you speak to other fundraising? I've seen you and I've seen you pitch and I've seen you work with venture capital. I've seen you get great venture capitalists like Jason Calacanis on board and also bring other people through. But speak to your ability to be able to fundraise going forward based on what you've learned from the past.
Absolutely. I think that the biggest determinant there is going to be that we are comfortable in our skin, as it were. We know that our business is going to be a huge business, and where we need the financing is to help us make sure that that huge business is us, because somebody is going to take this space, and it's no longer in doubt. The other thing that's been very interesting in the last few months is that there's been this rash of acquisitions. So a number of the companies that we used to compete with have been acquired. Over a dozen actually have been acquired. And then a company in an adjacent space, Frame.io, just got bought by Adobe for $1.27 billion. So, and that was like 2 weeks ago. So there's all this M&A. People have realized that this is a hot intersection and they want to own a piece of it. And so I have certainly good confidence in my ability to raise money. I think being on Republic has also really helped with that. Like just seeing the response, it's been phenomenal. And we're getting close to 1,000 investors that have already, purchased stakes in our company. But it's also very gratifying to see that people now understand what this market is going to do. I think a year ago or 2 years ago, it was not as clear. And I would talk to people about what we did and they said, oh, sounds interesting, but it's kind of a niche. We don't really understand video. And today, kind of everybody understands video. Like if you don't understand video, it's because you're not paying attention. 2 years ago, most people didn't understand video and it was considered a niche. So I would say that combination of my teams and my confidence about our ability to raise money and the broader awareness of what we're doing. They don't make it a slam dunk, but they make it a whole lot more straightforward than it would have been in the past.
Okay, wonderful. And we are going to finish rightfully with a question from Republic. And this is with regards to shareholders and people that are looking to invest in your company. Now, you have over 1,000 investors that are already engaged with investing with you. And the question is this: I am looking to invest money into Axle AI, but there are lots of other options on the platform of Republic that I could go into. I'm trusting you when I invest my money into. I know that Axle AI could fail and things could happen in the future, like every other company could fail out there. But you speaking to me and all of the other shareholders who are out there, whether it is shareholders who are looking to put extra money in because I know you're closing the round in the next day or so, or whether it's new shareholders coming in, speak to them about how you, as the CEO of your company, are going to do everything in your power to safeguard the investment that's been put into the company and why Axle AI for them is at least a good solution.
Absolutely. I think that's one of our strongest talking points. We are a real business. And many of the things that you see, actually Republic does a pretty good job of curating for that. So many of the offers on Republic tend to be realer than the ones that you may see on some of the other crowdfunding sites. But we are like a real business. And this money is going to growth and technology improvements that will help us grow faster in the future. It's not the kind of speculative risk where you're putting something into something and then a company is starting up manufacturing or they're just going to market and it's too early to tell what might happen. We're more in the middle phase where this is all about execution, and we feel really confident in our ability to continue executing and essentially converting incoming capital into faster execution on the goals that we have. So I think the downside risk with Axle is actually a lot smaller than most people usually think about with startups. But we can't prove it, but we're here, we've been here. And the best part is I think the market is growing so fast that even if we execute just reasonably well, we are going to have a really nice exit in 3 to 5 years, not sooner.
Wonderful. And I will finish up as a investor in Axel AI, as a shareholder in Axel AI, as a venture capitalist that was turned down when I offered him $50,000 additional. I still love Sam. I love the platform. I feel absolutely confident and comfortable with the leadership that's running this company, and I feel great about the investment that we have in there. Sam, thanks for everything that you've done. And any shareholders who are ever have any questions, I'm always happy to answer them about this company as well. It's just Brian@expertdojo.com. Thank you, Sam.
Thank you, Brian. And I'm Sam at Axel.ai, and really appreciate your taking the time.